But that's actually a real story. We had a couple. She was a doctor, just starting her career as a doctor, making like six figures, like low six figures. Husband was a marketing assistant, marketing manager, 75 ish. Back then was still good. So we got we got the mortgage application completed, sent that to the lender. Down payment was there, credit was amazing, everything checked the box, was supposed to be an easy home run type deal. Got the offer done, signed the offer was accepted, sent that to the lender. The mortgage was in process, was supposed to be, I think we were waiting for the appraisal to get things done. And so then, out of the blue, the husband decided to quit his job, and because he wanted to stay home with the 1 year old baby, and didn't ask us for anything, just quit his job out of the blue. Lender was still reviewing was a big bank, was still reviewing the purchase documents, waiting for appraisal. The whole approval wasn't even finalized, and he just quit. So we had to basically, is we were like, what are we doing here? Luckily, she was at that time, even with like, I think the stress test was starting or hadn't started yet, so we got lucky on that. But we had to scramble, is was like 2 weeks before closing, scramble to redo the papers. We had to disclose that to the lender, and then redo the whole, remove him from the application, relook at the numbers. Luckily, so good thing we had a very strong relationship with that bank or lender, and we managed to get things done and didn't lose the house and close on time. Um, maybe advice of the day during a mortgage process is, do not make any change to employment, do not quit your job, do not change job. Make sure to let your mortgage broker know if there's any change in income status, employment status, and let's time these employment changes for after the mortgage has been completed. Here's why. Any change in employment status will bring you back to a probation period, and to be qualified for a mortgage, you have to be off probation. So it will push your approval by 3 months, and hopefully by then you haven't firmed up the deal, because then your mortgage will get cancelled. You might have to default to a private lender or to a B lender with 20% down payment. And if you can't come up with that kind of down payment, you'll have to cancel the deal, which means that the seller can sue you and ask for compensation. So lots of like headaches and nightmare and lawsuits from those kinds of mistakes. So you want to make sure that we have our mortgage team and you have that conversation prior to starting the mortgage process, so we can time everything perfectly.